In today's video, we're going to be focusing on the Pi cycle top indicator because we've seen a parabolic advance in Bitcoin's price action rallying to new all-time highs and beyond, and this has considerably flicked up this moving average, which means that we're going to get a quicker bearish crossover in the Pi cycle top indicator to dictate a bull market peak in Bitcoin's price action if we don't pull back. So we'll be talking about that in today's video. So subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. But before we dive into today's video, a quick message from our sponsor. Our sponsor for today's video is Bitunix, and they are a really great crypto exchange for you to consider for your daily crypto trading and investing. They are a no KYC, no VPN futures exchange, and their liquidity is on par with the top exchanges. Users can trade over 250 trading pairs with up to 125x leverage without restriction. And to celebrate our partnership, we're running a very special offer. From December 17th until December 31st, you can sign up using my link and deposit $200 to get $100 back and win up to 6 Solana when you trade on Bitunix. Deposit rewards will be distributed on the very next working day, and the Solana will be distributed after the campaign ends. And for more information, check out the link in the description down below. Thank you so much, Bitunix, for sponsoring this video. So let's dive into the video and talk about this Pi cycle crossover, because every time we've seen a crossover in the two moving averages that constitute this Pi cycle crossover indicator, we've seen a bull market peak occur within a matter of a few days. So it's really important to just take stock and keep in mind that this crossover will happen inevitably in the future, and we need to be looking at these convergence of the EMAs in the future, because it's this convergence over time that's going to signal that bearish crossover that will dictate a Bitcoin bull market peak. And at the moment, we are far away. And a few months ago, we were actually seeing divergence in these two moving averages. But now, given the parabolic advance for Bitcoin's price action, we're actually seeing convergence. And we've been seeing this convergence for quite a while right now. So it's been several weeks where we're seeing convergence in these moving averages. And as long as this convergence continues, we're going to see a crossover in these moving averages. Really important to talk about these moving averages in particular, because the 350-day moving average multiplied by 2, that's this green moving average. It's a less sensitive moving average when it comes to changes in price action. It tends to move a lot slower, so it's not going to be flicking up as much as it flicks up, for example, here. Here, it's a very less sensitive moving average, so it doesn't move too much, but it does represent the price point of $130,000. And that means that this could be a resistance in the future, just like it was a resistance back in the past here. This resistance check right over here actually promoted quite a bit of a pullback. But the next time we get there, it's probably going to maybe even pull back a little bit and act as a point of rejection for Bitcoin's price action, but it's going to really just likely cause a shallower pullback, just to give us an idea that indeed, as a point of rejection, this moving average is actually weakening. So in the future, I do expect maybe some sort of rejection around here, but it's not going to be a strong pullback by any means. And one of the ways to look at this would be, for example, 2021 back here. Just have a look here how we were rejecting a little bit back here, maybe prompting a little bit of a reaccumulation range before actually breaking up beyond it. Whereas in the past, we actually suffered quite a bit of a pullback right over here. And it's not just 2021 or 2019. Here in the early stages of 2016, we also suffered a bit of a pullback and got a few more pullbacks right over here as well. But ultimately in the future, that point of rejection weakened, that point of resistance weakened to the point where we saw overextension towards the upside, and actually later it turned into a volatile support. So I expect something similar in the future for this green moving average, and that green moving average starts at around 130k. So once we get to 130k, maybe there'll be some turbulence, maybe some volatility to the downside and upside, but I expect that will, over time, within a short amount of time actually be able to break that as a ceiling and maybe establish it as a floor going forward. But that's a story for another day, isn't it? Because we're at around 110k roughly speaking right now. So we need to talk about potential pulling back scenarios. And the orange 111-day moving average, this one is the more sensitive moving average when it comes to changes in price action. It's going to be flicking up much more, as we've been seeing in recent weeks as well. In particular, given the price action ascension, this moving average is flicking up quite considerably. And it's going to be considerably flicking up going forward as long as Bitcoin maintains these highs and doesn't pull back. So we're going to be seeing, as time goes on, this figure will change from right now at present 75k, but then it's going to be changing and inclining and representing higher and higher prices at 75k, at 76, 77, 78k over time. And it's important to get a pullback as a result, because this moving average, it needs to start to flick down a little bit, because if this continues, we're going to get a sooner bull market peak for Bitcoin as per the bearish crossover. We'll be talking about that in a moment, so stay tuned, because this is still a support in the future. And 75k, really interesting how this 111-day orange moving average is an interesting support, because it actually ties in with the CME gap that we've left unfilled on this recent parabolic advance. Granted, of course, we have a very small CME gap forming here, and that's going to be very easy to fill even if we were to see a dip, and indeed we are seeing a bit of a pullback right now. This little CME gap is probably going to just get filled naturally, whether it's a downside wick, a small dip or anything. It's between 102k and 103k, but the CME gap that I'm talking about, the large significant CME gap that I'm talking about between 78k and 80k, that's quite interesting at how the CME gap is approximately confluent with the 111-day moving average on the pi cycle moving average here. So this could be a support. There is confluence right over here, and I wouldn't be surprised if this moving average continues to climb. As long as it continues to climb and represents higher and higher prices, 75k, 76k, 77k, 78k, it really depends when a pullback would occur, but I wouldn't be surprised to see the 111-day moving average on the pi cycle become 78k at some point, maybe even 79, 80k maybe, become confluent with the CME gap. And so if we were to see a price discovery correction, then dropping into the CME gap, that would be quite a 20-25% correction. We've seen 25% corrections in the past. We've even seen them in and around the pre-halving period. These are all 20 to 25% pullbacks. So let's not talk about pullbacks of 20-25% not being possible, because we've just seen these, and many of these happen between March and September, October. So they are very much possible, simply because they've already happened in this cycle, and also they tend to happen in price discovery mode, and they also tend to happen in every bull market. So these sort of pullbacks do occur. They are natural. It's not about being bearish or bullish. I am macro bullish on Bitcoin, but the sun has to go up, and then the rain needs to fall down, and that's just part and parcel of being a human, and part and parcel of the weather being as it is, and part and parcel of cycles going up and cycles going down. But inevitably, Bitcoin's going to continue climbing up. Whether or not it fills a CME gap, it can pull back a little bit more. History suggests that a price discovery correction is looming large. Whether it's week 7, week 8, week 9, or week 10, it doesn't necessarily matter exactly when. It's really what matters, and what is most important, is to be simply prepared for it. If that happens tomorrow, fine. If it happens in a few weeks' time, that's great. If it happens in early January, we still get a healthy pullback in Bitcoin's price action. Does it have to go into the CME gap? It would be very convenient. The CME gap is probably going to become confluent with the pi cycle moving average support at that point in time. So it will be very interesting to see how they both intertwine and serve as a support. But even if we get a shallower pullback, that would also be quite satisfactory, because that would enable the next parabolic advance in price discovery for Bitcoin. So by no means a bearish event. In fact, make the most of any opportunity for a pullback. So talking about the pi cycle moving averages, I need to talk to you about why this price discovery correction is so important, why it needs to happen, and just to make it a more healthy uptrend. and also to elongate and extend this bull cycle. Because if we propagate these moving averages as they are right now, then we're going to get a bull market peak in June 2025. And obviously that's sooner, much sooner than what has historically been the case. So if we do see a pullback in the future, then this moving average is going to start flicking down, and we're going to start, rather than seeing convergence between these moving averages, we're going to see divergence once again, and that's going to kick the can down the road, the proverbial can down the road in terms of a bull market peak, maybe into July, August, September, October. We need to see a price discovery correction take place to cool down price action and also cool down the amount of incline that we're starting to see here on the pi cycle moving average, which will dictate, by propagation, which will dictate a sooner bull market. So we need to kick the can down the road and see a bit of a pullback so that we can see a historically recurring halving cycle and get that top in September or October 2025. That would be the latest that we'd see a bull market top, but that's also what history suggests in terms of previous halving cycles. Post-halving parabolic price action tends to rally 518 days after the halving, or even 550 days after the halving. So if we see history repeat with a 500-day plus bull market peak after the halving, then that would get us into September or October 2025. And as a result, that's going to be the most that we can expect in terms of how long this bull cycle will take place for. So 500 days plus after the halving in terms of parabolic upside, that's something that's historically happened in the past. And as you can see here, we're only in month 2 of the parabolic cycle right over here, because we've broken up from this accumulation range only last month. So we're approximately somewhere around the very beginning of this parabolic upside phase. So still so much upside left to enjoy, still so much time left to enjoy in this bull cycle. But for this to become a regular halving and traditional halving cycle, we need to see a bit of a pullback, and that sort of pullback is going to enable price to really start to rally fantastically. Because for it to rally like this going forward, it's going to be quite difficult for price to really stretch itself, overextend itself to newer and newer highs without a pullback. It's going to be that more difficult to continue making new highs. So if it pulls back, it's going to be much easier after a pullback for price to rally higher. So that being said, that's about it for today's video when it comes to the pi cycle top indicator. Subscribe to the channel for more videos like this in the future. Hope you enjoyed this one. Like this video if you'd like to see more data science, metrics, and analysis on Bitcoin's price action in the future. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.